No, that tequila is not bad at all. I've never heard of this tequila, Pierre-Paul, but it's great tequila. Can you guys, Pierre, pull your mic? We're recording now, so pull your mic over.
Close, right?
Yeah, nice and close. So, Tony, you're going to have to speak right into it.
All right.
So we're here with Pierre-Paul Turgeon and his son, Tony. Tony, how old are you again?
I'm 24.
24.
Yeah.
Wow. Flashbacks to 24. Mm-hmm. I don't know if I knew what was going on in life at 24. I was starting to come out of the fog. I fell into the fog of confusion and just not knowing what's going on in the world at about maybe 17, 18. I started to come out of the fog at like 24. Mm-hmm. But I got married at 26. That was quick.
Okay.
It was quick.
To Italian lady, I might say. But the thing that we didn't have is internet, right? Like these kids are so smart, so intelligent. They know so much. They have access to so much information. So we didn't have that at our age.
Yeah, mind you, I feel like I'm starting to come out of the fog as well. I feel that.
Yeah, I can just tell talking to you. But your dad's right there. Like we didn't have that. Like you couldn't really build a context or framework. Like a global perspective was difficult unless you traveled a lot. You already seem well traveled. Mm-hmm,
yeah.
Why were you in Mexico? You were in Mexico for a month recently?
Yeah, I was there I have a lot of friends that I went to university with. And so one of them is a DJ for
it's short, Tony. You were at the party. The guy
big nightclubs.
DJ in
no, but I mean,
clubs.
I love Mexican culture too. I love a lot of
You were there at the party.
Latin culture, and I was there to party for sure. And
I like this. Your dad's
I did
calling
plenty
you
of
out.
that.
And Tony's trying to say, no, Dad. I was
buddy.
building a global perspective on the world, and Mexico was a key ingredient in that.
I mean, I did meet some people though. Did some networking. You always got to do that.
Yeah, cool.
His buddy is a DJ at clubs. Like he'd play at 2-3 clubs a night.
He doesn't have a French accent. So he was. Where were you born?
I was born in Quebec. Yeah.
You were born in Quebec.
Yeah.
And then moved to Alberta at a young age.
When I was 4. Yeah.
Oh, okay. Because you don't pick that up from you at all.
Well, I guess I don't know.
Yeah, and you speak French.
I speak French fluently.
Spanish?
Spanish fluently, not as good as French though, but definitely when I was in Mexico a month.
Finances courses in Medellin, Colombia, a couple of years ago for just to do a semester.
Medellin, Colombia.
You heard it?
Isn't that the cartel? Yeah, because I only know about it because of Netflix and those drug cartels.
Of course,
that's the place.
That's why we're drinking tequila today.
Yeah. Are we having more tequila right now?
I think so. I'm always for.
Okay, yeah. Let's. But while we're doing this, you gotta tell me because. I haven't really done the salt lime thing. We were talking about this.
Start with the tequila, salt, and finish with the lime.
Cheers.
All right.
Cheers.
Tony, you ready?
Salud.
All right. Cheers.
Cheers.
Salud.
Cheers. Cheers.
Salud.
Cheers. Oh, the salt lime combos.
It's so good. So good. So good.
Wow. So Tony, I'm just curious. Why were you in Colombia? What were you doing there?
I did an exchange there with my university. So basically, I was super fortunate to be able to do this. They had a bunch of programs, international exchanges, and I could go basically anywhere in the world. And I chose Colombia because, I don't know, the culture attracted me. It's really rich culture, and I'd been to I'd traveled in South America before.
Cut the crap again. He went for the girls. You know that.
No, I mean...
Oh my God.
They're good
I'm
looking.
listening to this beautiful answer from your son.
not-
Your
it's
dad
not-
pipes in your cut.
I
the
know,
crap.
right? What is this? I mean, of course, the girls are really beautiful there, but I'm not going to deny it. But no, it's a really vibrant culture, and it's they know how to enjoy life there. So and they had a really good finance school. So I
was going to make a joke. A good finance goal because they're doing a lot of drug money.
Yeah.
I think Colombia, to be fair, I think it's very different from the Colombia that we were watching on Netflix.
Yeah,
But,
I mean, there still are some aspects of that still. Like there's I think there's a few.
You could feel
kids.
it when you were there?
Well, there was some kids would pull up to school in like Ferraris and stuff. So I mean.
Oh wow. Okay. Got it.
Their parents are.
They're not working at McDonald's.
They're not, exactly.
So, I want to ask your dad about some Canadian real estate stuff. But before we do that, so now being in Mexico a little bit, in Colombia, how do you think that's affected you? Can you pick up on that at all? Or is it difficult to maybe even understand how it's affected you?
I think traveling gives you a broader world view. It broadens your the amount of people you can associate with. You have a better understanding of where how people think and how they, culturally how they behave. And so it kind of broadens your worldview, and you're able to, connect with more people. So it's definitely more opening for sure.
Yeah, well said. You must be proud, Pierre.
I'm very proud.
Proud, like to that type of answer at 24.
For sure.
And I agree with you. I think sometimes in North America, people don't travel enough. So they have a difficult time understanding some of the financial challenges, political challenges, just lifestyle challenges that people have all around the world. And if you travel a little bit, you pick up on that, and you can have a lot more empathy for different worldviews.
Yeah, 100%. Yeah.
So,
and for my wife and I, as you know, I started traveling. I was 14 years old. It was a value. I could not conceive our children not speaking French and English. And of course, I didn't realize, I never imagined or dreamed that my kids would also be multilingual like I am. So I'm extremely proud of both of our kids. And my daughter, who's 22, also in university, just graduating in, in nutritional sciences, also speaks Spanish. She spent some time in South America like Tony did. You remember that trip we took to Machu Picchu 6 years ago?
I remember, yeah.
Yeah, we went hiking to Machu Picchu and went mountain biking in Bolivia on Death Road and stuff. So that was with him. I met up with him in South America. But both of my older kids are trilingual, so I'm pretty proud of them, and they're smart. So.
Yeah, that's awesome.
And I just want to say about traveling, I would highly recommend it to everyone, because especially nowadays when people are so polarized, right? I feel like it's a way to bring people closer together a bit, So
I find a lot of the views on real estate, money, politics,
Canada.
When I have a view from just my own relatives in Croatia, to see, they went through a war in the 90s. That might seem like a long time ago to a lot of people. I kind of remember it pretty vividly. So they went through a war. They went through hyperinflation. So a bank shut down in Croatia last year, like in 2021.
Wow.
One of the local regional banks
Okay.
shut down. My brother-in-law, who had an account there, lost the euros yeah. So when Canadians talk about, when people talk to me about like, oh, this kind of stuff can never happen, I'm always like, it's kind of like a very fortunate position to believe that stuff can never happen, because around the world, shit happens a lot. And in Canada, we're kind of sheltered from it.
Yeah,
really,
totally.
Tom? Because, I love your macroeconomic stuff, right? That's one of the pieces of knowledge you have, but I wonder where this is going. Anyway, we'll have a chance.
No, I think, I think we're headed
concerns.
Well, yeah, when you start moving the dial on different types of freedom, I think when Elon Musk put in his bid there that he's going to buy Twitter, he actually said now it's on hold temporarily.
Right.
There's a lot of bot accounts and trying to figure it out. But he said that standard line that I think is very useful. It's like, I want freedom of speech. I want the person who I don't agree with, and I don't agree with their views, and maybe I don't even like them. I still want them to have the ability to speak freely.
Why? Because that's how you evolve.
It makes you question your own thoughts and be
Exactly.
critical thinking.
Absolutely.
So what Canada's gone through in the last little while here with the pandemic and the way that was handled, the Canadian truckers and the way that was handled, it's a little. To me, it's cranking up the dial a little bit. And if you don't have a world context on where that dial is headed, you kind of just accept it. You're like, oh, well, they were a nuisance in Ottawa and it had to be done. They were there too long. And I'm like,
Bullshit.
Yeah, I'm like, well, if you kind of just move that dial a few more steps, where are we exactly?
Yeah.
And
freedoms are impacted or violated.
yeah. And
But thank God we have people like Elon in the world. I mean, I think he's going to do a great job with Twitter. I'm really excited to see what he does with that.
yeah, me too. My only big beef with him right now is the fact that he keeps pumping that Dogecoin. That's my only beef with him. I'm like, dude, people are going to buy that thing because you're saying it.
I think to him it's a joke.
It's a joke, but I'm like, some people are just going to kind of ape into that and just regret it at some point. But anyway, very cool that you're traveling around the world.
I hope you don't mind that I brought my son. I thought it's a great way of exposing him to you guys. Like I said, you got to hang out with successful people like you. And
you're too kind.
And your brother. I mean, that's what it is. But yeah.
Yeah, thanks for having me on.
No, it's great. And now you're moving from Alberta to Toronto. So why that move?
I came here because, I there's a lot of opportunity here. In terms of startups, this is the second largest startup ecosystem in North America after Silicon Valley. So there's a lot of growth, a lot of new companies, a lot of the greatest schools in Canada around here. and there's a lot of businesses that are taking off here. So I wanted to come to the place where I had the greatest opportunity to find work that I like and find people that are, high energy, that make an impact, and I think this is the best place to be right now.
Yeah, cool.
May I add, again, I'm very proud of him. He packed the old 4Runner that we gave him. He's got everything he owns. He's very Spartan, doesn't own a lot of stuff. It's got to look good, like he's got the polo shirt. He's got the muscles like you. Everything is in the truck, and he knows nobody. Well, now we've introduced him to his godparents who are just here in Oakville, but he doesn't have a plan. So he says, I'm burning all bridges behind me, and I'm going to make it. And I really, and I'm very proud of him.
Yes,
Not an easy feat in Toronto, right? It's a big jungle. Urban jungle.
It's an urban jungle. It's an urban jungle.
Yeah.
Yeah. But I mean, you cut your teeth in Toronto and you can cut through a lot of stuff.
Like in New York.
It really kind of hardens you a little bit.
And make it anywhere.
Yeah. I kind of credit some of the growing up through that whole software industry where it was basically like, if they didn't like you and you didn't meet your number, you were kind of let go. Not kind of. You were just like, hey, these American software companies were kind of vicious, right? So you didn't, if you were in sales there and you didn't make your number, you were let go. And seeing people get let go and seeing the pressure of a quarterly close and a monthly close and just learning was incredible. So there was a lot of like bad things I took away from that environment, but there was a lot of positives and a lot of learning I took away that allowed, I think, Nick and I to start Rockstar and help Rockstar's growth. So yeah, the urban jungle, we can all kind of make fun of it, but there are a lot of lessons.
Oh, yeah.
You pull a lot of value, and especially if you meet good people, there's a lot to take. So,
well, I thought, so he's good looking, he's smart, and he's looking for a job. Anybody out there listening? This is Anthony Pierre Turgeon, and girls that are good looking and smart like him, he'll give you.
I like it.
Look at that plug.
Look at this. Pierre-Paul is plugging it. You go for it, man.
Right.
You go for it.
I'll take it.
Just reach out to me. Support at Multifamily Investing Canada, and I'll link you up.
Let's get into.
This is my broker for getting dates
You're a
here.
broker. Hey, I thought you were just into real estate brokering.
That too.
So everyone listening to this who's in the Greater Toronto area is going to want an update for what the heck is happening in Alberta right now. A lot of Ontario investors have been.
Do I know that ever?
Yeah.
Yes.
So tell us, what are you seeing? What's the latest in your neck of the woods?
Well, listen, we're on the verge of a boom, finally. After 6 years of misery, we're on the verge of a boom. We don't have the demographic growth too much yet, but it's starting. I mean, you know that the number that the federal government wants to bring in terms of immigrants is another 400,000 people. Where the heck are they going to go if they come to GTA? Where are they going to live, Tom, right? And
we have no housing here for them.
Well, I know that. And so in Alberta, as a matter of fact, it just so happens that we have a vacancy rate that, depending where you're looking at. Edmonton, officially, they'll tell you 7.5%, but it's actually 15%, because, yes, you folks listening to this CMHC's rental market survey reports are flawed, all right? So that's a different conversation. I've talked to you about that,
yes.
Right? It's they call the owners and they say how many vacancies. They don't want to give the truth to the surveyors. So we have vacancies.
And they're just checking buildings, too. They're not checking, like, single-family home landlords and their
Well, no, they do the differentiation between the kind of assets, yeah.
They do?
They do that, yeah.
Okay.
Yeah. Oh, maybe they don't. Maybe you're right.
When I looked into it, they didn't. It was just multi-unit.
No, I think you're right, Tom. Now that it comes
so on single-family, we're always like, well, this is kind of
right.
useless.
So there you go. There's another one of the flaws that I didn't think about, but you're right. So, but we have vacancies and low rent and low housing costs. We have it. So to me, we're expecting in a matter of months having a lot of Ukrainians. They're speeding up the process to bring Ukrainians here. They'll come to Canada, and I welcome that. So for me, that's that. Of course, you know what the price of oil is. I haven't checked today, but WTI Western Texas Intermediate is in the $103 a barrel. Western Canadian Select, that's our Canadian oil, is in the range of $92 a barrel. Between me and I've been warning you about this. You know that. Everybody listening to this, I've said this is coming. We're going to have an energy crisis. We're in it now. It's obviously made worse by the war with Russia and Ukraine. I wouldn't be surprised the price of oil could go. And again, it's cool for me to be here in your studio saying this, because I predicted this energy crisis up to $150 or potentially to $200 a barrel. Not excluded totally, but 150. I'm pretty sure it's going to get up to that.
Where's the minimum for it to stay at for Alberta to be?
Oh, it's way above. We're way above that minimum to break even and make money. It's in the lower range of 60%, or $60 per barrel. So we're way above that. Oil companies are making a ton of money. But the good news, so yes, a lot of fellow Ontarians are, sold their homes during COVID, have a lot of cash. They come and buy homes cash, Canmore, in the mountains and all of that. So a lot of money is coming, or investing in apartment buildings, because values are almost half what they would be, let's say, in the Golden Horseshoe, where it's a couple $100,000 per door. You can still get decent building for $118,000, $120,000 a door. In Edmonton, Calgary is always a bit more expensive because the universe of apartment buildings is a lot smaller, about a third of the size of Edmonton. So you're looking at $200,000 a door and upwards, but it's still nothing like here, which is $500,000 a door for multifamily properties. So finally, I'm pretty sure this is the time when this is going to happen. Alberta is diversifying. You know that it's been named the hydrogen hub of Canada, Edmonton, that is. So the large oil companies, Cenovus, Canadian Natural Resources Limited, Suncor, obviously, that has a lot of offices in Toronto. They created a consortium to invest money in research and development to lower their emissions. So, I mean, Anthony is in, environmental sciences. He wants to work with a startup company, but I keep telling him, I understand why you're here, but the future really is in Alberta. And I know this is going to be shocking for Easterners, and I'll make it the...
I don't think it's shocking. Well, if you understand what's going on with energy in the world, I don't think it's shocking.
Well, you and I are well-read, so that's, I think a lot of the Easterners, and I include Quebec and all that, just came back from visiting family, don't necessarily understand. You and I, because we travel and we're worldly, we understand.
And because we're
that.
Leafs fans, we understand that. We're
that
fellow
too,
Leaf
that
fans,
too.
right?
Although
We're Leaf
I'd be more
fans.
like a Habs fan, but don't tell your younger brother, Tony. But you know what I'm saying? So I think, but now people are starting to pay a lot at the pump for their gas. So they're starting to understand that. So it looks to me like finally Alberta is understanding that, okay, we cannot just ride the booms. We need to diversify. We've got the Amazon and high tech as well, because downtown Calgary office space, the vacancy rate is in the range of 27-30%. It's been in that range. Like it's not.
Is that the range it's been in?
Oh yeah.
Wow.
So a lot of these are converted into obviously apartments, but also a lot of head offices, high tech offices are moving to Calgary. And the reason why even the oil and gas companies, we're always in Calgary. Why? Because we're an hour away from the mountains. Like I'm an avid skier and all that and lifestyle, right? Edmonton, you're 4 hours away from the mountains. So finally, yes, we are expecting a boom. Absolutely. And we need immigration to get out of this incredible debt that we're in. So where are they going to send those immigrants? If there's vacancies are non-existent pretty much across Canada, I think a good chunk of them will come to Alberta. So I'm very positive. For the first time, I think, since I've been doing these podcasts with you, I'm getting ready. I'm here to attract capital, by the way. I'm at the multifamily conference tomorrow, May 14th and 15th. And anybody is a accredited investor can reach out to me at support at Multifamily Investing Canada. But why? Because I have not bought in 6 years, because it's been a miserable 6 years.
I remember you explaining. I remember you were saving costs. Remember all the stuff you were doing to your buildings to try to cut costs.
But we still do that.
Of course, you've carried that forward.
Yeah.
But okay, so the money definitely you could see in the next few years will flow to Alberta.
And it's going to be diversified economy. They're diversifying the economy finally, which they should have done years ago.
Okay, I want to ask you about that in a second. Are you, and definitely Ontario investors have been buying property in Alberta.
Yep.
Are you seeing people yet arriving? Like we're talking about the Ukraine.
No,
are you
not
seeing?
yet.
Not yet.
But we expect that in a matter of months.
Okay, so are job openings in the energy sector because of the price of oil starting to pop up again?
Labor shortages
Are they?
Absolutely everywhere, absolutely.
Because a big thing in Ontario would be there was just so much money to be made out there. Even if you didn't move out there, you were working out there. A lot of people I know were living in parts of the Greater Toronto area, flying to Alberta for 2 weeks at a time or weekdays and flying back home. So maybe we're going to start seeing all this kind of stuff again.
I think so. Listen, I mean, oil companies are making a killing. Right, we're at, like I said, Western Canadian Select at $92 a barrel. They'll train you. They'll do. I mean, it's we've seen. And Tony, remember that one of my good buddies is super rich in oil and gas, and he did a program right for you guys, an investment program, Tony. And he took us. I was a chaperone. He took us to an oil rig, right? And the kids that were there, they were high school graduates, didn't have a university degree.
Where
worked
was
on the
this oil rig?
rigs.
It was.
Yeah, talk about it, Tony.
It was an oil and gas stock investing club that we had in when I was in grade 12 in high school, and we did a few field trips, and we got to see what it was like for these companies. We got to go on an oil rig, and we went to see we went to go to a bank too and see how we trade stocks for these companies too. So it was.
But the point I'm making about the oil rig, though, who was working there? They were kids that had just graduated from high school. They were making over $200,000 a year, 2 weeks shifts like you just described, no education. So there's a shortage of labor. Yeah, absolutely. So it's going to be a good time finally. And for me, of course, I would change how I invest now because I didn't know that. I think I shared that with you. I didn't know I'm an Easterner, like people that are listening probably, well, you've got people across Canada listening, but as a true Easterner from Quebec, and I spent, as you know, a lot of time in Ontario as well, I did not understand that reality of oil and gas and the cyclical nature of it. But quite frankly, I think I've said this to you, a lot of these organizations, real estate associations who shall remain nameless, I think failed us to warn us sufficiently about that. It's a ride. I mean, at the end of the day, Tom, it's real estate, it's cyclical, but there was one component in the marketplace was oil and gas. And honestly now, what doesn't kill you makes you stronger. Now I follow the oil and gas, like I said, daily basis. I can structure my investments differently. Like I'm super excited myself. Tony's excited to be in Toronto, but I'm excited for this new wave because now I'm smarter investor, right? I probably wouldn't, go to as high as my loan to value. So I would lower my leverage. I would do a lot of things differently. But quite frankly, knowing what I know now, if there's a blimp in the marketplace, like just the number of wells being drilled, I'll see it coming the next cycle. But I know it is like that. Do you know what I'm saying? But then again, I can blame myself for that. Or even CMHC. I think I said this to you the last time they failed to acknowledge that risk. Okay? And just to give a hint, I mean, by the time this is aired, people, it's going to be too late. But when I teach my students the numbers, I go through this pro forma. Like even the way the industry looks at these numbers, like a lot of people, like sometimes your listeners, because they reach out to me after these interviews. They come to me and say, "What the hell? I ran the numbers. Like I got the operating statements from the vendor. Why the hell are my numbers not working? Because are you sitting comfortably, all three of us? Some frickin' numbers are missing from the pro formas that the appraisers are using, that the underwriters are using, and CMHC and all that. What the heck?" So I teach it. This is the game you play to get your financing. But if you raise money like me, these are all the additional numbers and expense items you're going to include so that you can calculate your cash when your debt coverage ratio properly. So there's a bit of a game in that. I don't know why. But to come back to my initial point, I as an Easterner, I've been in Alberta over 20 years. I did not understand the nature of the oil and gas industry sufficiently. And I said, no, I'm going to educate myself. This isn't going to happen to me another time, right? And now I'm in a position.
You have to get burned badly. Like, I think for our family in 1990, when that was like devastating.
Tell them what the interest rate was back then.
Oh my gosh. So our father was flipping properties late 1980s. He ran a drywall company. Drywall company was actually doing really well. It was like things were booming, especially in this area. And he started flipping properties. For anyone listening who knows Mississauga, it was north of Square One.
Oh, yeah.
And in that area, those subdivisions were built late 1980s. He was buying new construction and flipping them. And he was making more net income off flipping properties than net income from his drywall business. So all the sweat and tears and labor and inventory and pricing, bidding on projects. And then he started flipping real estate, and he was like, "Oh, well, this is easy." The natural the natural thing. Yeah. Until so 1990, 91 was like this interesting time. Like GST came in effect in 91. I think it was 1991 or GST came out and all that stuff. But right around 1990 there, he bought this one property at Mississauga Road in Eglinton. So he had others, but this one was the demon property. He bought this property. It was 4,400 square feet, 3-car garage in 1990 for $750,000. So that's 32 years ago for $750,000. Wow. 4 months after he bought it, interest rates, Bank of Canada said, whoa, things are getting crazy. We're going to raise interest rates. Kind of like they are now.
Right.
But everyone's freaking out about a half point now, right? Like half point's like, whoa. In 1 month, they raised rates so high that TD Bank, to our father on the mortgage, raised them 2.9% in 30 days. Oh, 1 month. So just under 3% in a month. So people are freaking out about a half point here. They did that in a month. So the higher end market, especially the starter home market, also got devastated. But the high end market went immediately to crickets.
Really?
Like, there was just no buyers. Wow. It went from mayhem where people were, I remember trailers, because they were selling properties out of trailers, not fancy sales offices, which are essentially trailers that they kind of build out now. Yeah. These were literally just like construction trailers, and you go in, you see some plans, and you buy the house. Okay. People were lined up outside these things, buying them. People were flipping the paper, so assigning deals on the gravel parking lot.
Wow.
outside of those trailers.
Explain what you mean by assignment, because people were losing their homes, right?
No, at that time, the real estate market was going up. If you got a property from the trailer, you got in. Somebody was in the gravel parking lot saying, I'll pay more.
Okay.
I'll buy that paper off you. You bought that house for, $700. I'll give you $750 right now. Let's do an assignment deal right here, right now. Right. So that's how crazy it was. Okay. But then you're right, Pierre-Paul. So then what happened, 4 months after our father bought this particular property, luckily 2 others he managed to sell. This one property went from $750,000 in value to, we think, $450,000.
Ouch.
So it was a $300,000 loss. I think that's about 40%.
So what year we're talking about?
1990.
Okay. Because interest rates in that thereabouts were about 13-18%, weren't they? Do you recall?
Yeah, that was right. The right range. Yeah. Kind of in
Imagine.
that.
So people are complaining at what is it now? 3.5%.
Yeah. Oh gosh. Yeah. It is all relative though, because if you had something at 1% and it's 3%, and it's percentage basis, it's
a higher rate. Yeah.
Yeah. But so they raised interest rates 3%. Market came down. We couldn't sell the house. We were only guessing it was worth $450,000. But we couldn't sell it because we would be so underwater with the bank. It would jeopardize our Mississauga family, like our family home. Our dad had some leverage on it from the business, and so it was a bad situation. So we couldn't sell it. There was no buyers. Okay. We rented it out. Even when we were renting it out, I would go and collect the rent and stuff. We were losing as a family on that one property about $1,000 a month. In a deep recession, when his drywall company was just coming to a halt, like the recession was so bad, my friends and I, we just sat in my parents' backyard one summer. Everybody was working the summer before. Everybody was construction jobs. Like it was on fire. Mine's, maybe like Alberta was on fire, right? Yep. And then just the next summer, we literally just all gathered in my backyard, hanging out. Nobody had work. Wow. Nobody had work.
Crazy.
Yeah. And then it ground down real estate for 6 years. It just ground down. So now when I see people in the GTA, because real estate prices are settling down now, and everyone's like freaking out, and it's been like maybe 2 months of this, I'm like, oh my gosh, are you possibly ready for another 6? Yeah. Which the macroeconomic environment's different. I wouldn't expect that for other wrong reasons, which we can kind of get into. But
I definitely want to get a take on inflation, because you've made your statements. I wonder where you stand now.
Anyway, it seems like real estate in the GTA is really booming, though. Even though it seems like we're entering a recession, I don't know if it'll.
Oh no, it's calming down the last couple of.
Yeah, I would say across the board, if you're to generalize, which is always dangerous in real estate, but if you're to generalize, GTA is like down 15%.
Oh, okay.
Like across.
So it is down. Okay.
But it's down from like a super spiked high.
Yeah.
So then it depends. Like if you bought a property 3 years ago, you're kind of like, I don't really. Like, and if you're renting out the property, the vacancies have not changed. In fact, now because rates are going up, people that we know that have some vacancies, they have more demand than ever because the people haven't left this area. People are still here.
Well, you know what? I heard something crazy this week. I heard that, some new construction towers that are being built near downtown Toronto were getting sold out within 2 hours of them being on the market. It was crazy.
Yeah. So I don't know that one, but yeah, I believe it.
But it's happened in the past on pre-constructions that sell out like hotcakes. It's not.
And then prices change. Sometimes builders decide not to go through with the completion, and
you can't really generalize. I think.
Yeah, it's tough. It's so project by project and so specific to area. Even in Oakville,
location is everything.
Oakville's different than Toronto, different than Hamilton. Pockets of Hamilton are different. Downtown Hamilton's very different than by McMaster and the Hamilton Mountain. So real estate's such a local game, which gives, I feel, all of us an advantage because institutional investors have been looking for yield or a return on money for a long time, and they're starting to pile into real estate. Like the Canadian Pension Plan put $845 million with a U.S. company to buy U.S. single-family homes because they're looking for returns, and real estate offers a return. But it's difficult for these people to get into the properties that we deal with because it's not liquid, it's not efficient.
Right.
It's a very local game. So the local investor, you still have this advantage over institutional money because they can't crunch the numbers like your father can crunch the numbers. They don't know the little missing details. Like I wanted to talk to you more about numbers, but when he's crunching the numbers, he's looking at vacancy rates a little bit different. He knows that bachelor unit that said is fully occupied is really a storage closet and not a bachelor unit in the building. It's not a 13 unit building. It's a 12 unit building.
Yeah. Lots of small details.
There's
like
all
that.
these small details that greatly affect the returns,
Right.
whereas the institutional money can't pick up on those. So they buy these things. They don't know what they're doing. So the illiquid nature of real estate and the trouble you have to go through to analyze it is actually its greatest advantage to the small to medium sized investor.
Right. Because it's very area specific too. If you know your stuff in that,
you're
in
more
that
nimble.
location,
You can
then-
gain it's difficult for us here to get an information advantage on the equity markets in North America.
Yeah.
Because we don't have connections in the boards of these companies, which might quietly share some data on the side and
Right.
that kind of stuff.
And we don't really have access to that.
We don't have
as
access
every
to
day.
that,
Yeah.
but that's the information that gives some of the big players an information advantage on buying and selling. But in the real estate market, we can go knock on the door across the street and say, hey, Pierre-Paul, in your building here, I'm curious, how's things going? And he can say, you know what, it's been shit for 6 years, but this is happening, this is happening, this is happening. Don't see it yet, but it's coming. And you can, you're like, oh, shit.
Yep.
Okay. But the institutions aren't going to go knock on someone's door and talk to you, Pierre-Paul, about that kind of stuff. So
It's too bad.
it's too bad. It's our advantage.
They're welcome to call me too,
Yeah, sure.
Because I did insure these larger deals, obviously.
Yeah, you're
The
unique
REITs and
because
all
you
that.
used to do the big stuff. Yeah. For anyone not familiar, please recap your story just briefly for context. What is your past life? Just
you
tell
want me
everyone.
to be verbose? Yeah, okay. You don't want me to say that I met with Yasser Arafat because I helped create PMHC, Palestine Mortgage and Housing
actually
Corporation.
forgot about that.
That's my claim to fame.
Who is that
You want me
even?
to say that I managed the default management real estate department in the Per region for CMHC in 3 provinces, 2 territories, and then I was, of course, an underwriter, multifamily underwriter. How short is that? So that's what I did. Yeah, I underwrote. I did all of that. It was a lot of fun. So just to repeat, yes, I work for CMHC International, helping other countries set up something like what CMHC does, which is mortgage default insurance. Hence the reason I helped. I used to travel to this Jerusalem, pretty cool, and Ramallah and the West Bank in the Middle East to help create PMHC, Palestine Mortgage and Housing Corporation, which to this day still issues or insures mortgages and so on. And then I moved to the Alberta regional office, CMHC's Calgary office, which underwrites in Manitoba, Saskatchewan, Alberta, and Northwest Territories, and Nunavut, and lately Yukon. So that's kind of my background. I manage default of apartment buildings, and the real estate side is when people, single homeowners, default on their properties. The banks have the duty to sell the assets after a certain exposure on the market. If they're unable to sell these assets, my department would take them back. So I manage a small group of people, 2 or 3 employees, depending when, that would be responsible to sell these assets back on the market, these single homes. I was managing defaults of apartment buildings. Here's something I want to tell Tom, and I do have a favor to ask you. I need a chart from you from your blog post a couple of weeks ago. You know about the cycles, the interest rates, and the Bank of Canada up and down?
Oh, yeah, absolutely. Yeah.
But apartment buildings to this day, all right, so we've seen 2008, 2009, the Great Recession. We've seen the oil crash 6 years ago. Now it's going up again, and now we're in the beginning of a recession. It's fair to say that we are. But throughout all of that time, people need to understand apartment buildings. Real estate is always a good asset. You keep saying this on your vlog post, hard assets, income-producing hard assets. Well, apartment buildings are a few notches above that because, for example, your vacancy risk is diluted among more units. So you have one vacant unit in a 24-unit building. Your building's still operating at 96% capacity and all that. But despite all these crises and recessions, apartment buildings, steady Eddie. During COVID, our vacancy rate barely went down. There was little turnover and so on. Tenants paid their rent. So it's a stable asset for sure. But so that's sort of my background. I was an underwriter, multifamily underwriter. I did a little bit of single home underwriting as well, and I managed the default real estate department at CMHC for 4 years. So,
what are some of the numbers that you tell your students now that people miss when they're looking at a multi-unit? Is it still, like, to me, if I was to guess, it would be like vacancy rates are always kind of like a little funky.
Well, I warned them about that. So definitely warned them about that. And like, I'm going to be on stage on Sunday at the multifamily conference, and I'm going to give them a bunch of multifamily investing hacks. CMHC, it's good data if you compare it to other countries. They don't necessarily have a national housing agency like CMHC, but a better source of information, that's where I'll share that. talk to a property manager, a well-established, or realtors. I think you have a better sense for the actual vacancy rates in these markets. Like I said, Edmonton, case in point, CMHC tells you it's 7.1% vacancy rate. In actual fact, it's closer to 15%. So that means that your investing strategy, what you do to your units, what does the market want? How, when you've got a tenant turnover, how do you react? What upgrades do you put in to cater to that tenant?
Have you noticed any changes?
Oh, absolutely.
Yeah. What are the current trends on
Gone are the carpets. Everybody wants vinyl, nice vinyl planks, which it's twice the cost for me, but it's 3 times more durable. They want the nice square baseboards and lighter colors and all of that. So you do have to spend money in a nicer kitchen. So yeah, there are definitely some.
So you have to
balconies because of COVID. That's something that studies have shown that you needed.
Because of COVID,
people want to take a puff outside or something, or take a breath of fresh air. So balconies or an office space because people started working from home during COVID. Oh yeah, there are definite trends. So you got to be aware of that. But some of the numbers that are missing. Have you ever heard of pests? Bed bugs and things like that, and cockroaches. This is not just a matter of cleanliness. I'm not a slumlord, but they're everywhere. They're in hotels. The nice.
I've had to deal with bed bugs before. Oh my gosh!
Of course, you're a real estate investor,
gosh!
Right?
Right in the middle of. I remember one bedroom I was in the middle of, and these tenants. This was a student rental property, and these particular tenants were back home out of the country. They were international students, and I had to get rid of these bed bugs. And I went in there, and there was just clothes everywhere. I had to pick up all the clothes, throw them in garbage bags.
Yep.
They were saying, "Hey, don't throw out these clothes and that. Don't throw this out." And I'm like, "Sorry, I can't distinguish. I'll just have to write you a check for what I do wrong here." Yep. Started throwing everything out. I looked in between the mattress, in the mattress, you can push
the seams,
and you can see those bugs.
Yep.
Oh my gosh, so disgusting. And in the baseboards around the room. And I remember getting home after that experience in my garage at my home. I got completely freaking naked. I took everything off. I threw it all in the garbage bag. I came into my house naked, right into the shower. I was like, oh my gosh, I can't have any of this kind of stuff enter my house. But I'll never forget. I think I called Nick, standing in the middle of this bedroom going, I'm just surrounded by bed bugs right now.
Oh yeah.
And they're hard to get rid of. We had an exterminator in there a couple times, didn't get rid of them. We ended up getting some white powder from the U.S. that was like magical that we put around places. Finally got rid of it. This is a disaster.
But it's common. So you won't see any of these numbers in a pro forma. Sometimes you won't see even snow removal. We're freaking live in Alberta, a long winter. Accounting, right? There's certain things that don't fit there, like depreciation and amortization. Obviously, that's not an operating expense. But there are some of these numbers that are just not there in the pro forma. So you got to be careful with that, right? Bookkeeper, accounting, right? So, So I don't know why. So oftentimes this is where people get shocked. So you got to make sure that you have a good debt coverage ratio, right? Your income covers your annual mortgage payments with a good, healthy DCR. The minimum, for example, CMHC or conventional, which is non-CMHC insured financing, is 1.25. CMHC is 1.3, sorry. But don't just go for the basic, the basic debt coverage ratio. Go higher because shit happens, right? It's real estate. Yeah. Shit happens. So you got to cover yourself for that.
And what are the interest rates in this world right now for multi-unit properties? Is there a ballpark?
Well, do you know what? So I haven't done a deal in a while, but with the bond market lately, the last 3-4 months,
so if you were to guess,
it's going to be about 3.5%, 4%. It's getting close to 4%. Whereas 6 months ago was in the 2% to 2.25% range.
Yeah, so
you see the bond market, right? I mean,
we're like on rentals.
313 this morning.
Yeah, is that what it is this morning?
Mortgage bond this morning. I checked it out.
It's 313.
Yeah.
Today. Oh wow. Okay. Yeah, it was over 3. It came back down the last couple of days, and now it's back over.
So actually, let's work backwards. If we go base, because I checked it out this morning before I came here. So at 313, people usually the banks will add at least half of a percentage. Or to a percentage on top of that. So 4 and a little bit more.
Yeah, we're seeing the single-family rental rates at like 4.25.
Yeah, there you go.
Right now, so primary place of residence, you'll get a little bit less. Yeah. Variable, you can still get like maybe 2.25 after the discount that you get from Bank Prime.
Yeah. Would you not get out of variable right now, Tom?
We've always done so well with variable
rates.
Even
now, you're not worried with
I'm just
the bond
not
market going up?
I'm just not worried. I think it's so dependent on everyone's financial situation.
Yeah.
Like if it's your first property and you're
Yeah,
tight,
you want to lock it in.
You might want
A
to
guy like
sleep
Tony
at night.
should lock it
Yeah,
in.
just
If he
lock it in.
If he ever buys a home, I'm not sure our kids can buy a home.
Yeah, I know.
Unless we help them, but that's a different conversation.
I'll be buying a home.
Yeah. Oh. Yeah.
You'll be a renter.
Yeah, yeah.
Oh, you'll bump me out. Oh, okay.
But
Well, actually, I'll rent what I live in, and then
there we go. You do some
buy what I
you'll
rent
do some
out.
house hacking there. There you go.
Yeah.
But we've done so well with variable and Pierre-Paul. I think our financial situation right now, we can kind of absorb some shocks because if I can get variable for 2.25 today and fixed at 4.25, I don't know. It's going to take 4 half-point raises, which who knows, they could be coming. I don't know. That's still a lot of gap. So I'll risk it on the variable still. But if it was my first property and I was tighter on cash and wanted to sleep at night, freaking lock that thing in and just
I'm
sleep
surprised,
at night.
but I guess it makes sense. I'm surprised.
We've just always done variable.
No,
The
but
interest.
you said it because of we've been investing for a while. We have a greater tolerance.
If it was my
for
first
shocks.
property right now and I was
You got a
tight on
fixed budget and
lock the freaking thing in because volatility is ahead.
Yeah.
No one's. I know we were just doing a bit of an economic update to Rockstar members, and one of the messages that we discussed is that we're like a fork in the road. We either have a pretty hard recession in front of us, or we have high inflation.
Okay.
You know that choose your battle, and there's a possibility that we get both. Okay. There's a possibility that we get high inflation going forward and higher rates. And that can work for the central banking system because if inflation's at 12% and rates are at 8%, hard assets kind of still win. And there you go. Yeah.
Permaflation in Bloomberg this morning, right? That's pretty cool.
Yeah. Is that?
This is from this morning
can you
again.
describe what you were sharing? Yeah.
So what is inflation?
Well, just read that this morning. I think it's an interesting concept. Of course, our Tiff Macklin said, it's transitory. Not so much. So obviously, Bloomberg, this is an article about the U.S., but because of what's going on, the geopolitical situation, war in Ukraine, right? So obviously, supply chain issues, lack of demographic growth. What else am I missing? What else?
Energy, just global
energy. Of course, costly energy transition, right? Price of oil. This is not transitory. This inflation. I don't know, but you're an expert. I'm not an expert.
I'm not
I'm
an
one
expert.
of your students.
No,
Tom.
no,
oh
no,
my
we're not an
God. I'm
expert.
one of
We're
your
just
students.
But I think we have to be prepared for it's weird. You just have to be nimble because if we enter a hard recession here, usually the central banks cut rates.
If? Are you saying if?
No, I think we're headed there.
Yeah,
I mean, all the
please.
data is showing that we're headed towards a recession.
It's not an if. It's a when. And
when is it official?
Sooner rather than later.
When is it official? Yeah. Q1 in the U.S. was already negative.
Yep.
Q2, if it's negative, that means they would announce probably by July into August that they're officially in a recession because it'd be 2 quarters back to back of negative growth. So we're probably already in it sitting here right now.
Right.
But then you have this inflation. So some people relate it to the 1970s. We like Lynn Alden, who's a great macroeconomic analyst, her approach more is the 1940s, where the central banks will try their best to keep rates as low as they possibly can, and inflation kind of will rip above it, which kind of means you could have an interesting a bunch of scenarios there. You could have rates go up, but if inflation is higher than those rates, real rates, you always have to adjust for inflation. So if the 5-year rate goes up to 5%, but if inflation's ripping at 10%, the real rate is -5, meaning hard assets and things around us are going up at 10%. You're paying 5%, but you're still up 5%.
Right.
Because if you own a beautiful multi-unit buildings and inflation's ripping rents and pushing everything up higher, then if you could have a high rate at 5%. But it's actually low because adjusted for inflation, it's negative real rates.
But the rate itself is rigged. Like what's in the basket?
That's a whole other, and that's a whole other
We're
thing.
not
Because
gonna
if we talk about 10%, like right now, if Canada's saying, what was our latest print? It was like
7.1 or something. Or
yeah,
6.7. Trying to remember.
That was 8 point something, whatever it was,
okay.
7, 8,
All right.
whatever the last number was that came in for Canada. Like if that's what they're telling us. Let's face it, it's at least 12 to 15.
Oh, absolutely.
At least 12 to 15. Look at oil, look at housing prices, look at food.
Food, yeah.
If you look at the price of steaks, just go into any butcher and talk to them about the price
Next
of
time I'll
tenderloin
bring you
or
some
ribeyes.
venison steak.
Yeah. I have to come out to you and.
Well, you're
enjoy
overdue,
that.
you and Tom. Absolutely. And the kids.
I know.
We'll organize
I
something.
know. But if you just look around, everything's going up.
Yeah,
so we're in this weird environment where I think a lot of Canadians will just get like frozen because they'll hear mixed messages. They'll hear like rates are going up and they don't know what to do about inflation. They don't know they should buy some hard assets and how to look at things. So it's just a very confusing time.
Buy Bitcoin. Buy Bitcoin.
Yeah. Yeah. There we go.
Oh, yeah. But you've said it.
I like Tony more and more as he's sitting
well,
here.
I said you guys would get along. I knew that. I think it's time for another shot of tequila.
Yeah. I thought you were only going to have one shot. You're
Another one.
Didn't you just?
By the way, we had one before starting the podcast. For all
Yeah. Yeah. There we go.
All right.
Your father said it loosens the tongue.
There you go. Salute.
Hold on. Let me get my salt. Hold on.
Okay. Oh, I'm too.
Here we go. Salute.
Cheers.
Thank you for this.
Salute.
Thank you for this. Yeah. Cheers.
Oh, it's good. So good.
I honestly haven't done tequila like this since my Acapulco days.
But isn't it nice though?
No, it's nice. Usually we were talking, Tony and I, we drink a sophisticated style.
I'm so sorry I brought
tequila.
the cheap
Oh, man, no,
stuff.
you don't have to apologize. This is great. No, this is great.
No, you know, high quality tequila like they have in Mexico. It's so smooth that you don't need lime. You don't need
you don't
salt.
shoot it.
You
It'll
don't
be
shoot
an
it.
insult to them. It'll be an insult.
All right. Next time.
Oh my gosh, no, this is fantastic. You don't apologize for a single thing. This is amazing. Let's also share with everyone how you just poured tequila right over the whole table here.
Oh, you've got
the table that I love and I cherish
you've got
so
these
much.
fancy glasses that are the weight.
Don't blame the
tips over.
glasses.
Oh yeah, it's the glasses' fault, right?
Yeah.
Come on.
Anyway, well, I want to get into the buy Bitcoin thing in a second here, but I just think we're in an environment where most Canadians need to be ready for, a very volatile rates and very volatile inflation, and it's a tricky time. But I'm curious. You're saying you don't think it's so tricky.
Huh?
You were saying you don't think it's so tricky. Like the environment's not that tricky. Why do you
Did
think
I say that? About what exactly? What we're talking?
Because I was saying like it's a difficult time to figure things out. Like inflation could go up and it could be volatile and rates can go up. And you're thinking, no,
No, I agree with you. It is tricky. No. I think it's a very complex situation. We've got a world order changing right before our eyes. Like, as you remember, I studied political science with a minor in international relations, and I'm looking at what's going on with the war with Russia, interest rates, and I just don't know where the world is going. With,
That's interesting
shortages on the shelves. I went to my hometown in Quebec. Noranda, we're in Noranda near Kirkland Lake, for those of you that know Northern Ontario. And I went to the supermarket and I said, there's a lot of empty shelves. I said, what the hell is going on? Well, the staff shortages. I get to the cash. It's a little 12-year-old kid because that's all they can find to man those cash registers.
You don't think it's supply issues too?
No, I've asked.
Supply chain issues?
It's labor shortages.
Okay.
So a lot of the stuff that we took for granted, like traveling, I mean, we got the means to do that still, but a lot of people, you can't take it for granted to go south in the winter. So I'm just wondering, the world is in turmoil. I'm reading, of course, every time I come here, I'm always curious to see what you're reading, but Ray Dalio, The World-Changing Order, right? And yeah,
Changing World Order. Yeah.
Oh, well, close enough.
Yeah, I'm reading
Pardon
that one
my
too.
French, but
Very interesting.
Very interesting. Have you not? Do you read Ray Dalio a little bit?
No, I've had multiple people. One person gave me this book, and I've never read the book.
Oh, I think you're missing out. He's a bit verbose, I would say.
There's something about Ray Dalio and me that just doesn't jive. I'm not sure what it is.
Oh well,
I listen to Lynn Alden. Lynn Alden does a good distillation
Yeah.
of a lot of Ray Dalio's concepts, so I kind of get it filtered through
Which
her.
book I've read? You've told me to read Lyndon. What's
Lynn
the name?
Alden. No, she's a female, and she doesn't have a book yet. She's talking about writing a book. She's absolutely
Why
fantastic.
do I know her? It's probably one of
We
your podcasts.
actually did a
That's what
podcast
it
with
is.
her, and
Yeah.
that podcast, I think it's up like 65,000 listens in about 6 weeks for us.
Wow.
Because
Yeah,
we're
that's
usually
what
in the
I saw
300 to
her. Yeah, I
600
remember.
person listen.
Okay.
A little higher than that, but not much. And that one got
And her last name?
Alden,
Yeah, 'cause
Alden.
that's where I saw her on your podcast.
Oh no, she's
I
fantastic.
remember.
Her free email that
Yeah,
she
I
gives.
did. I did sign up for it. So
just-
20, definitely want to sign up for her.
It's absolutely fantastic. And she talks about a lot of these concepts. But you brought up Russia there. And it's interesting because when the sanctions went in place, when the Western world said to Russia, okay, this war is broken out. And I really want to distinguish between the humanitarian aspect of what's happening and like the geopolitics. So I'm just referring to the geopolitics here, like what's happening on the ground to people, because my own family's been through that stuff, is absolutely devastating.
Oh, yeah.
When you're upended from your home and you don't know where you're going to go. Like,
Agreed, yeah.
That's
Oh,
like,
I give money to the cost to
yeah,
the Ukrainians.
what it does to people is just insane.
But I got a question for you. I don't want to go too far from the inflation and tie it back to real estate. So this article, like I said in Bloomberg this morning, says that, so obviously this is a U.S.-based article. It says there's also the prospect of a sustained run-up in rents due to America's dearth. How do you pronounce that, Tony? Pardon my French. Dearth, right? Dearth. Right.
Dearth, probably like lack. What does it
for
mean?
me.
Lack of.
The last sentence.
There's also the prospect of sustained run-up in rents due to America's dearth of affordable housing.
And run up in rents. So
Rents, yeah.
question for you. Let me be the interviewer for a second here. We know that most jurisdictions in Canada, so Manitoba, Quebec, Ontario, British Columbia, they have very strict, stringent landlord-tenant legislations whereby the province caps how much you can charge in rents. How are, owners of hard assets, apartment buildings, single homes rented out going to deal with inflation? Is the province going to adjust the cap, the ceiling for rent?
I think.
Do you have any idea how this is going to work out? Because I'm curious.
So in Ontario, so first off, in Ontario, when a property goes vacant, you can charge market rent.
Yeah.
You're not capped. So that's where a lot of
But
investors.
most people don't move out, is what I understand.
Yeah, we get a lot. We get some turnover. In
There's
single
ways.
family homes, you get, I think sometimes, but sometimes you don't. Like one of our rental properties here in Oakville, actually close to where you're staying.
Yeah.
Tenants have been there now for, I guess, 6-7 years. And the rent now looks like a complete deal. At the time, it looked really expensive.
Sorry, does Rockstar or real estate invest in, what kind of real estate do you guys
Typically single family homes.
Okay.
If I was to
Single family,
generalize,
okay.
there's pre-construction condos and there's like some people doing conversions and that stuff, but general single family.
Single family, okay.
But I can see a time here in Ontario where they're going to cap that as well, where you as a landlord have a vacancy and you're not going to be able to go to market rent. In the name of housing affordability, it's going to be, I would hate for it to go there. That's a horrible thing. But I can see that future, perhaps 3 years, 4 years, 5 years from now. And builders here in Ontario. So we just had Peter Politis from Greybrook here. He deals with the money partner behind a lot of the largest developers here in Ontario. Actually, they do stuff across Canada and in the U.S.
Okay.
They're based out of Toronto. They do a ton here with the biggest developers here. And when they're going to build a condo now in Toronto, there's so many headwinds, not only in the city where residents are fighting against the development of a new project, but then if they get through that, they're mandated to have a certain amount of affordable housing in different buildings now. The cost to pull that off has to be put to the other people who are buying the condos in that building. So it increases the cost of
the high-end rent.
Of the higher end building. So what some of these builders are doing, they're just walking away. So they're just choosing not to build the project. So a lot of when you get to a market that is manipulated or centrally controlled, it has the opposite of effect of the intent, where the intent is to introduce more affordable housing. But when you put so many regulations and so many artificial barriers in front of developers, they just choose to take their capital and deploy it elsewhere.
For rent now. Okay, you just gave me a cue for my rent. But before I get to my rent, and I'll keep it short. First of all, CMHC put, we're going.
No, good. No, we're good.
But CMHC put out, so this is for multifamily owners, March 7th, a great program to address some of these issues. Whereby it's called MLI Select. So I encourage anybody interested in multifamily. You got 3 baskets. You got one that you got so much X percentage of your units that have to be affordable. So that is for new construction as well as existing. So this is going to be a game changer in the real estate world in Canada. So that's my former employer, CMHC. The other basket is accessibility for people with handicaps. And there's a third basket, energy efficiency, right? If you're going to retrofit your building. So you can go up to 95% loan to value. So this is a small little down payment, right? So, and I think you have to keep your units affordable for 10 years. But please look into this. But my rent is the following. You may not like Ray Dalio, or you're not impressed or whatever, but he's successful. You know what his story is.
Oh my
right?
gosh, I think there's no doubt. Yes.
Yeah, I mean, Bridgewater is the most successful hedge fund in the world and all that. But because he put together history of currencies, which you're fond of yourself, and civilizations and all that, put that in algorithms. That's why his hedge fund is very successful. But the other component that a lot of people that don't know about Ray Dalio is his company is also very successful. Why? Because it's based on meritocracy. My beef with society now is people that expect everything from the government for free without taking on risks, right? What you just talked about, let me bring that back to what you just described about developers, the too many hurdles to cross. we have 3 levels of government, and we have a severe, severe housing crisis. Like, it's insane. We don't have enough people for Canadians, and now we want to bring in 400,000 more this year. Like last year, you know that these 400 people, the 1,000 people that they brought in were students, international students that were already in here. But now this year, the target...
January and February of this year is an all-time record for new study permits in Canada.
Yeah, there you go. But the problem I have, Tom, and it's a big macro picture. First of all, this housing crisis is caused by municipalities. Too much red tape. It takes too long to grant building permits. Okay, and it doesn't matter how fast they're not based on. Their performance is not evaluated based on performance and speediness of granting building permits. Right. Then you got the provincial governments that have managed the landlord-tenant legislations, and it's not realistic for a lot of landlords if you can't cover your expenses because you can only increase your rent so much. And then you got the federal government. I think now I'm going to give more credit, especially this last project or program by CMHC, MLI Select. Again, I encourage everybody to go and look it up. But they're doing a bit of an effort.
It's just the layers are so deep. Even if CMHC releases these things, if the municipal level doesn't really allow the projects to be built, great that there's a CMHC has these programs. And then I know that's your point.
It's the 3 levels of government.
It's a mess.
To talk together. They need to work together. We're not seeing that happen.
And I'm in the viewpoint of, markets tend to work themselves out usually. If you just let it be, oftentimes with capitalism they find, markets will find the solution.
I agree, but we're leaning toward a lot more socialism, my friend. That's the problem. I'm telling you. Start paying attention to that. I agree with you, Tony.
It does feel like there's a pendulum swing here in Canada towards more socialism and more of that type of thinking. And I just don't know if it's like human nature. Like Ray Dalio's book that you bring up talks about like credit cycles and the changing world order, and the summaries I've read of the book and what I've been told, about the book. The reason I think it's not that I don't like the guy. It's the reason I don't jive with some of it. And I guess I have to read the book now that you're bringing this up. But is that because the natural solution to a lot of the credit problems are this thing called Bitcoin.
Yeah,
it's a financial asset. A naturally emerging money is typically a naturally emerging thing in an economy. Like it's not like chosen or pointed to. And there's this naturally emerging thing and he doesn't address it. So I feel like he's identified all the problems from what I understand of his arguments, and there's this natural solution, but he doesn't like seem to point to it. So it just gets me scratching my head. I'm like, is there an alternative motive here? Like you've clearly articulated the changing world order and some of the problems of credit cycles, and then there's this solution to it, and you don't seem to address it. But now you're making me, you're going to force me to read.
Well, but I can see that. Having read the book, you're right. He doesn't address Bitcoin and all that, and I acknowledge my lack of knowledge. I mean, my Tony is like he knows a lot more than I do, but. Yeah, when you had me, well, you didn't have me, but you suggested I read that book, The Bitcoin Standard, and I quickly read it. And I agree. To me, there's definitely portions of it that will provide a solution.
Where do you think we're headed? If you had to guess with your crystal ball, with inflation and interest rates, over the next 1 year and then the next 5 years, take a random guess. No one's going to hold you to this because we all know no one has the crystal ball. But what do you see coming down the pipe?
What you see, Tom. So I follow you. Like I said, it's the knowledge that you have in macroeconomics and worldview. Yeah, I'm worried. I think I shared with you where we were staying, right in Oakville. I don't want to give details, but I had my friend tell Tony the story where a couple of years ago, here downtown Toronto, they were counting bars of gold, right? Because they're worried. They're like Europeans and the pharmacological world industry, and they're worried. So I am worried. I don't know. To be honest with you, I scratched my head. I was hoping you'd tell me that. I worry. So I'm glad I'm investing in hard income-producing assets. That's my reassurance. But I think we're headed for some kind of crisis. That's what I believe. And I'm glad I have what I have. I have land that's worth a lot of money, that's in high demand, like my acreage where I live in Alberta, and it's a great place, and I have hard income producing assets to me. But I suspect we're in for some significant world change where everything we take for granted, like you described what happened to your parents back in the 90s, something like that, a severe shock. Like I said, I truly believe, and I'm here in your
the simple math. The simple math in it is this to me. This is what I always kind of come back to, and I don't know if I can credit Greg Foss for this type of thinking or this summary or what. But
Greg Foss, the guy that
Greg Foss, he's here in Oakville. He's close to where you're staying. Actually, he's a good guy. He's actually in the U.S. right now.
Is that a book?
No, he traded bonds here in Canada for 30 years at the institutional level. Yeah. Okay. So I like the summary that there's about $300 trillion of debt in the world. The GDP of the world is, whatever we're going to call it, 80 trillion or whatever. I'm going to kind of round up here a little bit, but it's about a 4-to-1 ratio of debt to economic activity or GDP. So if it's a 4-to-1 ratio and the interest rate on the debt, if you just average it all, because some is lower, some is more, is 3%. That means after 1 year, that 4 becomes 4.12. Okay? For the gap between the debt and the economy to stay the same, at that 4 spread, 4-to-1, that means the economy would have to grow at 12%
For it
to become 1.12 for the gap just to be the same.
Gotcha.
Right? Because it's 4-to-1. There's a spread. There's
to keep going up at the same pace.
Yeah, just to kind of keep that same pace. And everyone can argue with the details here and the mathematical kind of, it's a little different on how you want to look at this. But in general, that's kind of a nice summary. So when I look at that, if the economy has to grow at 12% just to keep pace with the growth of debt, when's the last time we ever heard of GDP growth at a steady 12% growth?
12% is huge.
12% is absolutely huge. 3% is huge. 3% is huge. 12% is unheard of. So to do that, we just need inflation, which means to me, we are looking at least 12% inflation, no matter what the government tells us. Or if they want to make the delta or the difference between the economy and the debt look better, and they want the economy to grow faster than the debt, it would mean to me that we need a growth or inflation rate, not 12%. We need 15%. We need 20% for the economy to start growing artificially, at a rate faster than the debt is growing. And if the interest rates on the debt go up and it's not 3%, well, what the heck happens then? Yeah. You have to grow even faster. And I'm telling you, when they raise rates right now, emerging markets who have debt that's payable in US dollars, well, they now need more US dollars to pay the debt because the interest rates are going up. Well, then now they have to go hunt for US dollars. And it drives up the cost or price of US dollars relative to every other country, which means the fiat dollars of the Canadian dollars and all other countries, when you look at it compared to the US dollar, we're going to
relatively goes down.
It goes down.
Yeah.
So we're living in a world where Canadians better understand this math if you want to travel and you want to do things or you want to buy some Bitcoin.
So the solution is Bitcoin. Is that the point you're
to me,
make?
I mean, you kind of, if you say the solution is Bitcoin, a lot of people can easily label you as like, oh, there's another Bitcoin person. But when I look at all the factors here, I want something that is scarce. I want something that has all these characteristics of money that Bitcoin
that's decentralized,
permissionless, censorship resistant. I want all these factors in my money. So if I can have a combination of this world, because how are they going to get 12 or 15%? This is going to be nasty. If I have some real estate and some land in Alberta, like you're talking about, Pierre-Paul, and some real estate, at least it's in my name.
Yep.
So if the government's going to come after it, they can't just like shut down my login to my online trading account for the health of the system. Because I could see one day in Canada where they're like, credit markets are getting a little crazy, Canadians. For the health and safety of our financial system here in Canada, we're just going to ask that you don't do anything in your bank accounts. And, if you need a little bit of money, you're allowed to take a bit money. But let's just, for about a week or two, let's just kind of limit you a little bit because things are getting a little crazy. What I like about real estate, it's that I'm out of the system. My tenant owes me the rent. Yep. They can pay me the rent directly. If the government wants to tax my assets, at least it's in my name. I get the income first. Yep. If they tax me, they have to come after me. I know that sounds a little crazy for people listening, but I like it. I like it. They have to like chase me and I'm in control. Yeah. I own the asset. My name is on the title.
You can sleep well at night.
I can sleep well. Yeah, I can sleep well at night. And I love controlling a stream of cash flow because if the economy is getting difficult in any way, I want streams of income pouring into my life. And then if I can have some Bitcoin, that is even maybe a step further. It's a bit global. It allows me to keep some of my savings out of the system. For me and my family, it would almost seem irresponsible of me at this point with all the research that I've done not to have some Bitcoin. So the mix of real estate and Bitcoin to me is this is going to sound so cheesy. Like it gives me hope. I feel like, this is the mix for me. Doesn't matter what happens in the world because it looks like chaotic ahead. It looks chaos.
Very chaotic.
Chaotic. This allows me to kind of sleep easy at night. I feel like I'm just
No, but I don't know as much as about Bitcoin as you and Tony. But instinctively, I know you're right. Reading the books, the Bitcoin Standard and all that, I know in my gut it is sooner or later. It's a matter of time. It's not a matter of. But I know I don't have the details of your investment portfolio. But you invest in gold. You diversify your investments, right? You protect yourself.
Yeah, I think we're just maybe control freaks.
I think was it Steve Saretsky, right? I don't know if you follow Steve Saretsky on the West Coast, but
I don't know him well, but I know who he is.
oh, he's very credible. I think you'd want to subscribe to him as well. But yeah, I think you're ahead of me, but I do want to follow Bitcoin Tony.
But I don't think it's because we're control freaks. I think also there's huge gains to be made with crypto. I think it has too much. Well, some of them actually, not all of them, but some of these projects have incredible value. Like Bitcoin is a tremendous store of value, and with these other platforms like Ethereum and Solana. I mean, it's too valuable to right now we're in a downturn in the crypto markets, but there's no doubt in my mind that it'll go back up because it's too valuable not to be adopted by the mass population.
Yeah, a lot of brain power is going into the space.
A lot of brain power.
Sure.
Yeah.
But on your father's talk about Alberta, this is what's interesting to me with Canada and Alberta, is that when Russia had those sanctions put on it, the Russian ruble collapsed because everyone's like, holy smokes, Russian ruble is going to hyperinflate away. It's a worthless currency. And then Russia said, and this is where I want to separate the humanitarian from the geopolitics, like we discussed, when Russia said, well, you know what, you guys need energy. How about you pay us in Russian rubles? And in the last few weeks, I don't know if you've seen what's happened to the Russian currency. It's now stronger than it was against the US dollar than before the war started.
Okay.
So it started to hyperinflate away. And then Russia said, hey, hold on. And about 2 weeks ago, Italy asked the EU for clarification on paying for Russian energy, natural gas, in rubles because they, I guess, wanted some energy. And I guess they were on the verge of trying to get some and pay for it in rubles like Russia was asking. But the EU was saying, no. Then 2 days later, it comes out. And I don't know if I can 100% verify this, but I did see the news article on it that Italy did go ahead
and buy
in rubles.
Okay.
And the Russian currency is now stronger than it was before the sanctions went in place, before the war started. So coming back to Alberta, if I compare that, the power in a currency system, in a petrodollar system, a lot of people will argue, well, it's either the dollar, the paper dollar, and it's, the US that backs, supports that through its military and its geopolitics, or it's the actual energy, the commodity. And if you're Russia and you have the commodity, you seem to have won a little bit of a battle. You're like, well, if you want energy to heat your home and fuel your economies, you're going to do what we say.
Right.
And
Or
build
pipelines.
Canada. And this is where I'm coming back to Canada. Canada is in this very unique situation where we have a lot of and you'll know better than me, but I'll call it trapped energy. We have these awesome sources of trapped energy. Alberta, maybe, I know it's not fully trapped, but there could be more pipelines going to the coast.
And clean, Tom. Let me make a point. In the last decade, Canadian oil, like Western oil companies, have reduced their emissions by 30% the last decade. And now, like I told you earlier, they created a consortium to improve that number. It's the cleanest oil on earth. We won't get to zero net emission by 2030. It's physically, scientifically impossible. Nowhere possible.
So imagine we had a leader here who started to get pipelines built. I know there's energy even on the East Coast in St. John's as well. So there's energy in St. John's and out east in Alberta. Imagine we had pipelines kind of built to be able to share this oil, never mind internationally, just to fuel Canada.
Right.
Let's just talk about we don't have to import anyone else's oil because we have enough energy here. We could check that box off first, and then we could sell some of our excess.
Yeah, we need the infrastructure first. We need refineries. We need pipelines.
Yeah. And if you just look at the examples of what where the real value in an economy is, it's the people who have the energy sources.
Right. And I mean, I'm all for clean energy and the transition to renewables. But I mean, it's not realistic to drop fossil fuels overnight. It's absolutely not realistic, and it'll take some time. I think we should take this opportunity to grab the resources we have, use those resources, and perhaps finance some other initiatives that are more sustainable. But I think it's unrealistic to just stop cold turkey, stop all the investments going to oil and gas. I don't think it's sustainable either.
24 years old.
It's
Pretty
great.
smart, eh?
Yeah, it's great.
Had good teaching from Dad once in a while. Good indoctrination here and there.
We'll start. So Pierre-Paul, we'll start. What do you? This is going to go out on Tuesday of
Yep.
next week. So this conference will have passed that you're here for.
Yep.
But like, what are you up to right now? What are you doing?
I'm in,
Tell us. Yeah, what's going on?
No, I'm super stoked, Tom. So I'm a little behind in my projects, but some of the projects, like I'm here to attract capital. I'm still studying my courses. Probably going to wind that down to some extent. They're very successful, as you know. But I'm here to attract capital to acquire more apartment buildings in Alberta. And
So you're directly doing joint ventures, or
Yeah.
what structure are you attracting capital
I'm
in?
still dwelling on the structure. I like CMHC given that interest rates are going up. As you may recall, going CMHC route, it's a pain in the butt, but that's my area of expertise. But you pay interest rate 1% lower. So as interest rates are rising, it still makes sense. And since it's my cup of tea, but oftentimes people don't want to provide personal guarantees. I'm still toying around with the actual business model, where they're doing a GP-LP model. There's some cost to that. It's a little bit more complicated, but it's not a bad model. So I'm not excluding that model, but you don't even have to go there. For example, if you go CMHC route to pay a lower interest rate, you can go 65% loan to value, and the loans are considered non-recourse. So that means that your investors don't have to provide, or nobody has to provide personal guarantees, which is something that scares a lot of investors, right? But it could end up being a GP-LP. I'm still toying around the idea. I'm actually going to test the pulse of what investors are telling me this weekend. That's kind of what I'm doing. So that's one thing I'm doing, but definitely we're on the verge of a boom. Values are still low. Because of the high vacancies across Canada, like I said earlier, I think we're going to have a lot of immigrants and Ukrainians coming.
So you finally like what you're seeing in Alberta after 6
6
years.
years of frickin'
You came in
misery.
here the last
Yeah.
few times with your
With
shoulders
my head
were
down.
down.
Absolutely. I like that. The other thing that I'm going to do, because obviously you and I, well, me more than you, are getting a little bit older. We want to slow things down a little bit. So I've been delaying getting my mortgage agent license. So I'm going to do that in the next month and a half.
Oh, wow. Cool.
Yeah, well, it's kind of I train mortgage agents. They come to my workshop, which is insane why I've not gotten my license. So that's where I'm at. So that I would take files, from across Canada. I haven't figured out which, mortgage brokerage firm I'll end up with. But
Oh, you'll be great at that.
Yeah,
Coming from
well,
the
this
investor
is-
background
that's
and with your
my
CMHC
thing.
background.
Exactly. So that's what I'm doing, just to start slowing down. And we're at the phase where, our kids, Tony's not home anymore. We have one last child, 17 years old, who wants to join the military in the fall. So we're going to be empty nesters. So time to think differently and scale down. Simplicity. And, enjoy
The empty
ourselves
nester
travel.
stuff is, so my daughter, my son's 20, you guys just met,
Yeah.
and my daughter is now 16. And I'm like, wow, it's weird when you just have time on your hands. And Carol and I are like, oh my gosh, like, hey, let's
Carol, that's not a very Italian sounding name.
No, well, her father is Canadian through and through. Like her father was actually invited. He was a widower and had Carol when he was 59 years old. He was actually invited to try out for the Toronto Maple Leafs.
Oh, cool.
But it was the Great Depression in that time, and he's like, oh, I got to work on the farm. So he didn't go to try out. Can you imagine? What an era, right? Hey, do you want to try out for the Toronto Maple Leafs? Sorry. I got to
work on the
I got to work on the farm. I got to make some money. I don't think Toronto Maple Leafs weren't paying very much.
But people can check me out, Tom, at multifamilyinvestingcanada.com.
Repeat that.
Mick, multifamilyinvestingcanada.com, and see what I'm up. I sell my courses still. I'm re-recording the entire, more technology, not as fancy as yours is, but quite a few notches up from the initial course that I did. So I'm re-recording that with higher technology, more user-friendly technology. So
I actually saw an image, I don't know how, online somewhere of your setup at home, I guess, with a big computer in front of you and a laptop. You're saying you're not high tech.
Well,
that looked very high.
Like here,
that
studio, but it's somewhat similar.
No.
I've got a couple cameras. I'm getting there.
So your courses that I know you might be winding up, but everybody gives you just glowing reviews about your multi-unit investing stuff. That is available at multi-unit.
And I'll tell you what, very spontaneously for Rockstar members, I've got a deal going on now, $1,000 off.
People listen to this across Canada.
All right. So for the on-demand course, which you're going to get the next iteration in June, is when I think the re-recording will be done. You can get it for $14.97 plus GST because it's online. So I'm in Alberta, only GST, so not HST. I'll give you $1,000 off. and you'll get all the future upgrades, including the one in June. So that's just completely spontaneous. I didn't plan this.
So if someone wants to learn about how to analyze
Tell
deals,
me you're a Rockstar member, and I'll give you the discount for the on-demand course.
and that's at Multi-Unit Investing
No,
Canada.
Multifamily Investing Canada. Multifamilyinvestingcanada.com. MIC acronym.
Multifamilyinvestingcanada.com.
Yeah, and I'll give you that. That's just completely spontaneous, but for Rockstar
So
members,
on the site, they can reach out to you and say, I heard you
yeah.
say that. But there's going to be more than Rockstar members listening to this,
Doesn't
just so
matter.
you know. Someone listening to this
It's all
podcast
good.
can reach out to you and
Absolutely.
get that. And then, so that's your courses. And everyone who's taken your stuff always comes back raving about your stuff. I'm being serious because we have people who take a lot of different real estate stuff. Your stuff, everyone just absolutely raves about. You go into such detail.
And I keep improving it, Tom. I'm doing it right now because it's the 10,000 hour sort of what Malcolm Gladwell book. I keep, every time I get up on stage or I do a workshop, I keep taking notes and improving upon it. Like one of the things we do is more case studies. But I will wind down that. I'm not trying to, market this. I am trying to wind down that aspect of it a little bit. Less workshops, and I still do the virtual. I don't have a date. Had a very successful one in March. But
You mean in-person workshops?
well, or virtual, right? I may do a personal one. People ask me, but people seem to like the virtual one because of the fancy technology that I
Sure.
use. But yeah, so absolutely.
And then the raising money, you're just looking to do more deals. And if
More
you connect
deals,
with
accredited
somebody,
investors, we usually go for $500,000 per investor. I don't want small amounts, 50 grand. We don't want to have a ton of people. Some of them are for existing stabilized properties of mine. Some investors want out. We don't want to sell the assets because they're fully stabilized, no capex, and all of that doesn't make sense.
how do people reach out to you for that? Same, go to the website and use the contact us.
Support at multifamilyinvestingcanada.com. Support, just the rest of my website. Support at multifamilyinvestingcanada.com. If they good news about investing in an existing property, the property are stabilized. I don't have capex. I'm not a slumlord. I do spend the money, even though the times are hard. I know what's coming up, what tenants want, and I put in the money. And some investors, are tired or they're a different place in their lives. So there's that plus new acquisitions. But we're on the verge of a boom.
It's great to see you with this energy after the last
Finally.
few times you visited here. It's
Finally.
great. I'm happy for Alberta. I'm happy for you. I'm happy
Yeah,
for Alberta.
appreciate it.
Great to meet Tony. Thank you for the tequila. Thanks for the salt and the limes. Just so everyone listening, you didn't come just with the tequila. You brought in the salt and the limes. You were
course.
fully prepared.
Of
So I
course, of
really
course.
appreciate that. And Tony, anything you ever need, we're here. You can find us here.
Well, I'm going
Hey,
to...
thanks a lot for having me on.
Oh
It's
my
been
gosh,
great
yeah,
experience.
When's your next event? Because I want him to sign up. I said, you gotta know these dudes.
Yeah. And now we get a bit of a break. Our next large event's not
in the
until the fall.
Okay.
Yeah.
But I'll have him sign up for your blog.
We're booking Croatia. We're booking our. We're going out
Well,
on the
we were
Adriatic.
considering going to Croatia. Thank you for all that information.
That's right, yeah.
We might go actually to Italy, south of Rome. I don't know. Well, south of Naples, I don't know as much. So
Amalfi Coast. I can't blame you. That is a beautiful.
Yeah.
Have you been to that part of Italy?
no, that's
Oh.
south of Naples. I've never been, and I speak Italian. I think you remember that. So I look forward
my
to that.
gosh, that's
45 years.
Sorrento is down there.
Yeah, I've been to Sorrento though.
Oh, Sorrento is like one of my favorite places
Oh yeah,
in
it's
Italy.
gorgeous. The big orange trees.
Oh,
line
my gosh.
Side of the street. Now it's gorgeous.
Yeah.
Vesuvius and Pompeii. Yeah. Well, listen. Thank you for your friendship. You and Nick are fantastic guys. I always enjoy these. It's joy being here.
Yeah.
I
Thank
think
you,
it
guys.
shows.
Appreciate it, guys.
All right. Cheers.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Terms show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.